Hello everyone, in this video let's talk about house rent allowance. What is HRA? HRA is an allowance given by an employer to his employee towards the payment of rent for residence of the employee. Now let's say for example the office is in Bangalore and the employer wants his employee to stay in Bangalore so that he can travel to the office without any issues. So he doesn't have any place. Now he has to stay in a rented place. As a result, employer should pay employee as a part of his salary house rent allowance. Now, for tax purposes, HRA is partially taxable allowance. That means partially it is exempt allowance. Okay, so what is the maximum exemption an employee can claim? Let's understand that in the next point. Least of the following is exempt from tax. What is the first one? Actual HRA received. Let's say, for example, employer is paying 20,000 per month as house rent allowance. What is the second point? Rent paid minus 10% of salary. Now, how to calculate this salary? Salary includes basic salary plus dearness allowance percentage plus commission percentage. Percentage DA means if it is received as a part of retirement benefit, and commission percentage means if commission is received as a part of turnover or sales. That is the second point. And let's say for example employee is paying rupees 15,000 per month as rent. Now what is the third point? 40% or 50% of salary. Now why is this distinction given? 40% is when you are staying in any part of the country. Now 50% is when you are staying in metro cities. What are the metro cities? Delhi, Kolkata, Mumbai and Chennai. These are the metro cities. If the employee is staying in any of these cities, he will get 50% of salary as exemption. Now let us understand these 3 points with the help of an example. Let's say the total salary of the employee is 60,000 per month. How did we arrive at this 60,000? Basic salary is 45,000 per month. Dearness allowance is always given as a percentage of basic salary. So 20% of 45,000 is 9,000. And commission, let's consider commission as per annum. So 0.5% of the total turnover, which is 12 lakh, we will get 6,000 per annum. And if we add this basic salary plus DA plus commission, per year we will get 7,20,000 rupees. Now, what is the first one? Actual HRA received. So per month we are receiving 20,000, and if we multiply this for 12 months, we will get 2,40,000 rupees. That's our first answer. What is the second point? Rent paid minus 10% of salary. Now rent paid is 15,000 per month. So for 12 months he will be paying 1,80,000, and 10% of salary means salary is 7,20,000 per annum, and 10% of it is 72,000. So we will get 1,08,000 as our second answer. Now, what is the third point? 40% of salary. Why 40%? Because in this example, we have considered Bangalore, which is not a metro city. So, 40% is the allowance we will get. So, 40% of salary, which is 7,20,000, we will get 2,88,000 rupees. Out of these three, whichever is lower, that we will get as exempted house rent allowance. So, which is 1,08,000 rupees. Now, let's calculate taxable house rent allowance. So, house rent allowance received per year is 2,40,000 rupees minus what is the maximum exemption an employee can claim? 1,08,000 rupees in this case. So, if we deduct that, we will be left with 1,32,000, which is the taxable HRA. Hope this video helped. Thank you.
ಈ ವಿಡಿಯೋ ಇಷ್ಟ ಆಗಿದೆ ಲೈಕ್ ಮಾಡಿ ಶೇರ್ ಮಾಡಿ ಹಾಗೂ ಸಬ್ಸ್ಕ್ರೈಬ್ ಮಾಡಿ ಡೌಟ್ಸ್ ಇದೆ ಕಮೆಂಟ್ ಸೆಕ್ಷನಲ್ಲಿ ತಿಳಿಸಿ